Another contract that's been fairly interesting and volatile is corn. Let's talk about that for 2 seconds here. We've given back 29 cents of that $1.02 rally that we've seen as of late, as what they say in the pits, right? We take the escalator up and the elevator down. What goes up comes down a lot faster. We missed the July 2019 high by a penny. As I've gone to tape here a little bit, we're just a tad bit easier, but fairly interesting. And the volatility, I think, is going to stick around as we watch corn be the front page story, as well as the volatility kind of coming back to the markets with all markets that we've been trading. If you want to kind of take a look at downside support, this is what the technicians are looking at. I'm not saying we're going lower, but these are things you have to know in your playbook so that you can understand why volumes might pick up at certain levels and why they might not. I would say 383 is my first line in the sand, and then 371 will be the next one. Those are going to be the prices that you probably will see technicians step in to either defend or bears that will maybe come to the market to see if they can pop down through those levels. So keep an eye on that. But you know what? That's important because they're technical levels, and that equates to 38% retracement and a 50% retracement. So those Fibonacci levels coming back in there, I just highlight that because you need to know what those technicians are thinking, and so it'll explain why you see more volumes at those price levels. Lastly, crude oil's still been under pressure. That's not going to help us in the short term here. But corn is actually doing better than crude oil today, at least as I've gone to tape here. But something else to note, December of 21 corn, we traded just above $4, right? It took us a lot to get back up through that level. That's a big historical big figure number, right? Last week we did that, but as we went to market this morning, now we've bounced a tad, but we had a near-term low of 381. So a pretty decent move to the downside. So that's how fast these things can change on us. That's why I say we take the escalator up and the elevator down. So make sure that you use the exchange for what it's there for, and get those plans and those marketing plans down on paper. Get that risk down on paper so you don't have to worry about it. So again, these are great reasons why that's the case, because we do move so fast and things have been a little bit more volatile. Everything's been a lot more volatile as we go into this election. So kind of buckle up, keep an eye on what these numbers are, because you're going to see volumes kind of pick up at those levels. And we'll see what we can get going into the weekend. So we'll keep an eye on if we see anything pop up, but we'll make sure you know.